Welcome to a fantastic edition of Rebellion's educational series. I have the brilliant Dr. Jenny Peng with us today. I came across Dr. Peng by reading a few of her papers on the Chinese stock market, and I was very interested to learn more about the Chinese stock market because of its voracious movement the last few months. Dr. Peng, thank you for coming on today.
Hi, Alex. Thank you so much for inviting me here.
First question, is there a bubble in the Chinese stock market?
Yes, there sure is. Chinese financial market is very different from the Hong Kong and American financial market. Most of the traders or investors in the Chinese financial market is actually individual investors. So we would see that there is a lot of behavioral and irrational elements in the trading in the Chinese financial market. Combined with the rising of the middle class now in China. So we can see that actually in one of my papers, I see that when a firm is dual listed or cross-listed in both Shanghai and Hong Kong market, the A shares that are listed in the Shanghai market is very much higher priced compared to the Hedge price that is listed on the Hong Kong market. So we can see that there is a very strong uprising investor sentiment in the Shanghai Chinese market, and I believe that and also Shanghai Chinese market is protected by the Chinese government. They're trying to open up the market by launching, say, a Shanghai Hong Kong Stock Connect program, or they recently changed the rule of QFII, Qualified Foreign Institutional Investors. So Chinese government is trying to open up the mainland financial market, but they're just doing it step by step. There are still restrictions on short selling, margin trading, because they want to maintain the stability of the Chinese financial market, just like how they maintain the stability of the health situation now in China. So I think that in the coming 5 or 10 years, Chinese financial market is gonna be doing very well, even though there is also behavioral reason and political reason involved.
So, a stock like Bilibili, which is the most popular video sharing app among children, would you be more optimistic on their future in the next 5 years than YouTube, for instance?
Yeah. I think that's a perfect example there. I think they're going to do very well there. And also, we have a lot of amazing creative and companies in the high-tech industry, healthcare industry in China. For example, Dajiang, which is the one of the top leaders in the world, among the one of the top leaders in the world to make drones. They are, I think they have the largest clients now in the world. And there are a lot of other amazing companies such as Alibaba and other high-tech companies.
So how much further do you see this bubble rising, and do you have a time frame in mind?
When I say there's a bubble, is because I think there's definitely behavioral reasons involved, but I still believe that the economy itself in China is rising very stable. We can see that in the past 30 or 50 years, Chinese economy has been doing very well. And when the Western world is experiencing, say, the 2 large financial crises or the crisis during our COVID now, we have to note that the Chinese financial market didn't have such big disaster at all. So we all know that risk return principle, higher risk, higher return. So I would say in the American financial market, we have a strong return and development there, and it's a freer market. So it comes with a cost, it comes with risk. But for the Chinese financial market, it's growing rapidly with, I would say, less risk, even though they could have grown faster by opening up more the market, but they kept it not as free as the Western world and avoid the big disasters such as a few big financial crises.
Yes, China has been very stable, especially through the COVID crisis the last year.
Mm-hmm.
China also happens to be a very favored country among our machine learning system, actually. It's from a risk versus return, China might be its favorite country right now. It was maybe a day or two ago. So I want to know the economy. Do you see it shooting in 2021 like just a gigantic growth year for the Chinese economy?
Yes, I do. Yes, I do. We know that even in the past year, when I think during the COVID time, I would call it a China wonder there, where China is the only, I think, one of the few countries where they controlled the COVID in a very short time, and there was 0 cases for a lot of months, and it's amazing for such a huge country, and I think it's the country is very united, and the government's interventions are very strongly reinforced. So it's a very controlled society, a very controlled economy still, but it avoids risk. So I think that its system has its own benefits and advantage and disadvantages. I was born in China, and I came to US for my master and PhD degree, and I'm working as a professor now at Carroll University. But I mean, I love both countries. I think each of the system has its advantage and disadvantages, and I strongly believe that the economy of China will develop very fast, as well as the stock market in the next 5 or 10 years.
Reverting back to what you said at the beginning of
Mm-hmm.
the show,
Mm-hmm.
do you see a pairs trade developing, or a general pairs trade between the Hong Kong listed shares and the Chinese listed shares? Or do you think that that's kind of a situation that you can really trade?
Oh, actually now through the Shanghai Hong Kong Stock Connect program, there are a lot of institutional traders that are specifically trying to arbitrage away the edge price gaps. So Shanghai Hong Kong Stock Connect program actually provides us an arbitraging channel to arbitrage away the price gap.
But
And
if Chinese capital is locked in China and all they can do is buy the Shanghai listed, won't there always be a discount to the Hong Kong versus the Shanghai, because the capital in China has fewer options?
well, when I say there's short selling restriction, it's just that there's limitations in short selling. But now short selling and margin trading are getting opener in Chinese financial market, and especially through this Connect program, you can always buy the low-priced H share listed in Hong Kong and short sell the higher priced A share listed in Shanghai and make profit. And there are a lot of institutions doing that. And actually in my paper, I designed a lot of policy, a lot of time dummies for different policy changes. Whenever the Chinese government is opening the Chinese financial market a little bit, I would see a stronger arbitraging force in the market. And actually, I first would expect the price gap to be smaller after the Connect program. However, we also have a opposite hypothesis that there could be more even institutional investors joining the irrational individual behavioral trading in Shanghai market and even pushing up the Shanghai market. We actually find both the rational force of arbitraging away the price gap and make it smaller. We also find behavioral force to make the price gap to be even larger. And surprisingly, we find the behavioral force dominates the rational force. The price gap actually increased after the Shanghai Stock Connect program. However, the rate of increasing is decreasing. So both, we find evidence for both the arbitraging and behavioral force, but the behavioral force is dominating. For example, we find both A share prices and H share prices increased after the Connect program. However, the increase in the Shanghai market is higher or compared to the H market, leading to a higher price gap. And we think that this is because the Shanghai market has bubble component in it, and the price to demand sensitivity is higher in the bubble market. So when Connect bring demand shocks to both markets, the increase in the price is higher in the Shanghai market compared to Hong Kong, leading to a larger price. But the arbitraging forces are making the increase in speed slower.
Yes, no, that is true. So are there a few individual names in China you feel are certain untouchables because the government has chosen them to be the winner? For instance, like an Alibaba, where, do you feel that even if Jack Ma were to step down today, Alibaba would dominate?
Um, I think those are like two separate questions. I mean,
Sure, sure.
like
Take them one. Yeah,
for
I
for
agree they are.
okay, and for Alibaba, I think it is a big, large corporation now, and even Jack Ma stepped down today. I think he will definitely choose a powerful leader to lead the big ship to go on. And
Yeah.
as for the choices for the in the Chinese financial market, I would recommend just like in American financial market, I always recommend students to invest in SP 500, and I believe in the basic fundamental value investing. In China, I would recommend the same way to look at the big, large cap corporations that are fully established. And I will also recommend, especially those who are how can I put this way? This is a little bit sensitive, but if you see the major shares of the company are controlled by held by the Chinese government, or if it's a very key industry in China which is very connected to the society, I think the government is gonna make sure that the government is gonna back up such corporations and would never let it to.
Dr. Peng, I've got to interrupt you.
Mhm.
Our machine learning actually completely agrees with you. Now, out of all of the Chinese market, the FXI ETF, which is the China large cap, is actually its favorite individual Chinese holding. Obviously, we've got a good way to mitigate risk by buying the ETF. So no, I think that's a great point you make, that buying in the aggregate, and I agree with you, by the way. If I had not developed a Bayesian machine learner that could beat the S&P and that I was the CEO of, I would put all my money in the SPY, because over time you'll pay lower fees and have higher returns than all of the other, be it private equity, hedge funds. Your returns will lag the S&P on average. So, and if Rebellion were ever to shut down tomorrow, I'd put all of my money in the SPY, which I think is the most intelligent place to put your funds. But I probably want to diversify now with some China, because I think I agree with you that the Chinese stock market will continue to do very well, and the economy is in a very nice position. So this has been a great learning episode. Thank you so much, Dr. Peng, for coming on. I mean, you got a PhD from Johns Hopkins. I expected a good show, and you delivered. This was wonderful. So, do you want to conclude with any thoughts?
I just want to say that I actually got a PhD from University of Connecticut, but I do hold a Master of Science in Finance degree from Johns Hopkins.
Oh, my apologies. Yes, my apologies. Yes, I did confuse those two.
Yeah, and it's my great honor being invited by you here too. I know your fund is doing great, and I'm naturally interested in investing in Chinese in Chinese financial market, and also American financial market too. And I'm happy here today to provide my
wonderful
opinions.
Well, hopefully when we do some research pieces in the future, we can get you to add a quote or two for some of our articles. As you see, I'm sure we put out a lot of articles, and we actually just did 2 pieces on Pinduoduo and Bilibili. So, very interesting companies that look to have very bright futures. And obviously their stock prices have gone up tremendously. So, this has been wonderful, and stay safe during these crazy times, Dr. Peng.
Thank you so much. You too.
The pleasure's mine.